Restoration hardware stock goes from $240, now it's trading at $128. Just in 2 months, the stock has dropped more than 45%. What is going on? What's up, homie? This is Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to HowieVerse, where investing is driven by data. In this video, we are going to discuss about RH stock or the restoration hardware stock. The first segment, we are going to look at the price action. The price action where it is currently trading now at $128 per share, whether if it's actually the bottom or there is more pain to come. If there is more pain to come, how are we going to manage that risk? And the second segment, we are going to discuss about the business itself. If there is more pain to come, does the business reflect that? If the business keep improving, there is probably not so much pain in the stock. And lastly, we are going to show you why the stock is actually been performing in the last segment, in the third segment. In the third segment is actually going to make you sleep better if you own RH stock. So let's get to it. Here's the RH chart, and we are looking at this chart where it touches this low right here. Essentially, I have three lines. The first red line here is at $123, and the current price that is trading at is $128. And the second line is the 73 or $74 line, and then the last line is $22. I hope that RH is not going to go all the way to $22, which I believe that is 1% chance that it's gonna go even at that level. However, most likely what it's gonna do, you see this upsloping trend line in the white right here, and you see it actually dated back to all the way to market low in 2020, March 2020. And then if you draw that, and then it touches this line, and it also touches this line. And it seems like it wants to try to break down, right? If you look at it, it actually broken through this upsloping trend line. It might touch this point at 123. However, I am expecting a bounce here. And if we look at also the longer time frame in the 1 week time frame, it has actually broken through, but it has not confirmed yet. Since this broke through, we need to wait for a few days where it actually break down to the lower level. Now, however, I believe that the stock is still in the play where this two line, the upsloping trend line and this $123 line is still valid. So we're gonna use that. And also in the next session, why I'm gonna tell you why it is actually going to hold this line, not broken all the way through. And I am actually expecting that after it touches this line where I bought, and then it's going to bounce back to about this line. If that happens in a short term, then let's see, that is about 70% profit. Okay. Now, with that being said, I truly believe that is going to happen like that. However, on the downside, if it doesn't happen, what are we gonna do? So I already have a initial really small position here, and I'm willing to add a little bit when it touches this line where I expect it's going to bounce big, because this is dated back to the a year ago, April 2025. And that is also dated back to, dated back to over here when it's really choppy, and then all of the intersection in this line over here that coincide with the low in 2025. And I believe that this 123 line is very important, because if you look at the previous low, it went all the way to that line, and it bounced back. It bounced back, and then it closed the day on the green. So during the intraday on this line, this is a huge support um, for RH. And okay, so now we talk back on this line. What happens if it goes even lower? As I said, if it touches this, I'm going to add a little bit slower, and I'm not going to add until it touches this line again. So from the risk management standpoint, I am going to practice patient on this stock if it doesn't hit all the way here. And that's fine. I don't need to add, right? And if you look at what's going on in the near term is the earning. The earning is on Wednesday, April 1st, 2026. And the expected revenue is $873 million, and the estimate on the EPS is $2.2. So with that being said, the earning is coming up and it's actually coincide with what's going on here. And I expect that before earning, this going to go choppy before it's gonna bounce back. Okay, but we're not playing on earnings. Again, from the risk management point of view, I'm going to add a little bit here and then add a lot more here unless it touches this point. This over here is a no man's land. I'm not going to touch anything in that. All right, now we are looking at the RH third quarter result 2025 that was released back in December 2025. And this is the financial result. And there are a lot of key points that is going to point us that RH is not going to actually fall down the cliff all the way to 73 or $74. And let's look at it. The first thing that I notice here, if you look at this, the RH continued to generate industry leading growth and gain significant share in the third quarter on both 1 and 2 year basis. So if we look at the Q3 in comparison to the Q3 last year, RH actually grows 9%. In comparison to its competitor like Wayfair, they only grow 8%, Wells Elm 4%, Pottery Barn 3%, Lazy Boy 10%, and even other brands are in the negative. In 2 years time frame, the RH actually grows 18%. So not only 1 year, but 2 years, RH managed to grow their revenue or the market share. For the outlook, fourth quarter 2025, the revenue are actually grow of 7 to 8%, which is a really good solid amount. Yes, it's only 7 to 8%. However, considering that the stock went from $650, almost, was it $700, almost 700 to 400, and then 400 all the way right now is trading at $128. A falling off a falling stock that is growing 7 to 8%, this is solid, right? In comparison, yes, this is not Palantir. Yes, this is not Nvidia. However, the revenue growth is solid considering where the stock was at a couple years ago. Adjusted operating margin is 12.5% to 13.5%, solid. Adjusted EBITDA margin 18.7% to 19.6%, also solid. Fiscal year 2025 revenue growth 9% to 9.2%, improving. Adjusted operating margin 11.6% to 11.9%, which is pretty good. Free cash flow for 200 from 250 million to 300 million, also improving. This is really good sign. And let's look at their income statement, shall we? In their income statement, net revenue, $883 million, right? And if you look at their gross profit, the gross profit is 44.1%. And if you look at the annualized, is this the 9 month? Yeah. So this is the 9th month, and they are making the gross profit at 44.5%. So it's about stabilized at 44%. However, if you look at their 9 months, if I add this and then add this again, that comes out to about $3.5 billion. So in terms of their yearly revenue, they're making about $3 billion in net revenue, and they are making about 44% out of their net revenue. That's their gross profit, about $1 billion. And let's look at the income. The income is a little bit weak, to be honest with you. If you look at this is about $96 million, which is only 3.7%. So their net margin is very slim, and we would like to make sure that they do not go in negative. And the reason why I'm saying this is that the tariff is already stabilizing and where it's at. Another news from the tariff, I would expect, since if you remember from the chart, it went down in all the way to the lows in March 2025. That was because of the tariff. And the reason why I'm saying this, the tariff has already kicks in and it already bakes in into the price of the stock. And what's going to happen now is that there's only good news from the tariff side, because the I think it was the court, or the Supreme Court, that is going to overrule the tariff that is implemented by our current administration. And therefore, if that happens, that is actually the tariff news that is going to be that would be negated by the Supreme Court. That is actually good news for our age. That's all I'm going to say. And if you look at the net profit from last year, and in the same 9 months ended, it has actually gone up almost 100%, 80 to 90%, which is really good sign. So the net profit is improving from 2.5% all the way to 3.7%. So it looks like they find their way out of this tariff issues. And if also, what else is there? Right. So from the top line is 2.3 billion to almost 2.6 billion. And it seems like their net margin, no, the gross profit in percentage wise is improving by 10 basis point. Not that much, but the most improvement comes from here in the net income. So that is a really good sign. All right, so the company is growing, not only the top line, also the bottom line is also growing. This is a really good sign, and this is why that RH is not going to fall off the cliff down to $74, and I am expecting a bounce in this $224 trend line, and then going up to all the way to 200 something dollar, and that is when I'm going looking to offload the shares of RH. Okay, so in terms of balance sheet, the balance sheet is not as clean. If you look at the cash and cash equivalent, the company only have $43 million, and if they need to get rid or pay their current liability at 376 million, they are really reliant on this merchandise inventory. And the inventory, if you look at from the previous quarter, it has been going down. So let me put this in red. Right? Can I change the color here? Okay, I'm not gonna worry about that. So the changing in inventory going from a billion to 874 million, that is actually not a good sign in terms of balance sheet. And like I said, if you add the cash, they are not going to be able to pay for the account payable and the deferred revenue and customer deposit. And we can actually back on that. And this other current liability. Not sure what those are. However, if I take this plus this, that's actually come out to be about $600 million, right? $600 million. Yeah, we're really reliant on selling off this merchandise or our inventory so that the RH can pay off their current bills. Another points to make is that they have a really huge balance in their long-term debt. If you add this long-term B and long-term B2, those came out to be this 100. Yeah, that's about 100, 200, 2.5 billion dollar, 2.5 billion dollar in long-term debt. And if you look at the property and equipment, that is not, yeah, that doesn't even cover the long-term debt. So internal balance sheet, I would say this is a C minus balance sheet where yeah, it actually have the business to keep everything going around, but because of the debt that is larger than what they make or the cash that they generated, what is their okay, their free cash flow, it said was $300 million at the top, right? If I remember correctly. Let's look at it real quick. Where is the free cash? Yeah, free cash flow of 250 million to 300 million. And that free cash flow, if we look at the long-term debt and if we just pay it off all the way, that 25, yeah, that would take us about 8 years to take the free cash flow and then pay off that. That is a long time, for 8 years. So internal balance sheet, yes, it keeps the business operating, which is good. However, there is no immediate sign of bankruptcy. Nevertheless, the long-term debt is concerning. Action. Here's the last thing that I'm going to show you is the trend on the revenue side of RH. If you look at this trend, back in the day in 2013, they're making roughly a bit about like a billion point two, $1.2 billion. Nowadays, they're making about $3.5 billion. That is a solid growth in terms of where they have been. Yes, there is this frenzy in 2022 because real estate market is at its peak. And because of that, people are buying home. And after they buy home, they need to furnish their home. And RH is an example or the company that can actually provide that furnishing high-end furniture to their homes. That's why we see in 2022, RH has been making a lot of money based on that. Yes, it has been going down in 2024, but they are actually recovering and they are in growth mode right now. So if you look at this, it's at 3.75%. 8.2% growth. If you look at the bottom here, 10% growth, 11 or 12% growth, 8.3% growth. So it's still in the high single digit, and I expect the next quarter is going to be the same. If it's going to be the same in this type of trajectory, then I believe the RH is going to bounce and not falling off the cliff to $74. So this is not a thesis that I'm going to go off of based on the revenue. If we look at the net income, it's the same thing. They're making a bunch of money in 2022 when the real estate market is really hot, and they are currently capturing, yeah, we have a negative growth or negative profit in this quarter. However, they have been recovering. Although it's small, the net profit is still there for them to afloat the company. And if you look at the growth here, it's at 300%, 79%, 9%. And I expect that they continue on this trend on the profit side. And if they can do that quarter over quarter, there is no falling off the cliff. And therefore, I am looking for the bounce for the stock. in conclusion, the stock currently is trading at $128 per share. Yes, there is more downside according to the price and the chart. The first one is at $123 and the second one is at $74, and there is not likely that we're going to go there because on the second segment of the video that we saw, the business is actually improving. And the third thing is that we saw that the business, not only the business actually improving, it has been proven for many years the business can sustain itself. And also for the net profit, yes, in 2022 they have a lot of crazy net profit and to the bottom line, and that has been decreasing in 2024. However, in 2025 and 2026, it seems like the net profit is improving by a lot. So that's all I have for you guys. I'll see you in the next time.